Ever pondered over how open banking could revolutionize our financial management? Well, today we're embarking on an expedition into the realm of open banking. We'll discuss its origin, the technical foundations like APIs, which are the building blocks of this innovation, Auth 2.0, the backbone that ensures secure authorization, and the vital role of data encryption in maintaining the integrity and confidentiality of the user data. We'll also talk about how it's transforming both personal budgeting and corporate strategies. So, hold on tight as we dive deep into the fascinating and intriguing world of open banking, a true financial revolution on the horizon. So, what exactly is open banking? Open banking, a finance term, is deeply rooted in the utilization of open APIs, which are essentially sets of rules that allow different software applications to interact with each other. These open APIs enable third-party developers to craft innovative and tailored services around a financial institution. In open banking, these APIs are used as a bridge to allow your banking data to be shared with authorized service providers. By integrating these APIs into their systems, financial institutions can expand their service offerings, providing a more personalized experience for you, the customer. Open banking also involves data sharing protocols that ensure the seamless and secure transfer of your financial information. These protocols establish the rules for data transmission, providing a secure pathway for your data to travel from your bank to the authorized third-party provider. This allows access to a variety of financial products and services custom-designed to meet your specific needs. Security is a top priority in open banking. Your data is only with your consent, and it's done so employing cutting-edge encryption technologies and multi-factor authentication methods. This ensures that your information is guarded from any potential threats, providing you with peace of mind. In a nutshell, open banking is about empowering you, the customer, by leveraging technology to provide custom solutions while ensuring the highest level of. Now, you might be pondering over the distinctions between open banking, API banking, and banking as a service, BaaS. Allow me to elaborate on these advanced financial ecosystem elements, each with their distinct characteristics and advantages. Open banking, as we've dissected, is about data sharing. It enables customers to share their financial information with approved third parties, nurturing a more interconnected, personalized financial journey. Diving deeper into API banking, it leverages specific APIs like RESTful APIs, SOAP, and JSON RRPC for secure data sharing with third-party applications, fostering innovation in financial services. The architecture of API banking is designed to be robust and secure. It uses HTTPS Secure Communication Protocol for data transmission and OAuth for secure third-party access. Banks expose certain functionalities of their systems as APIs, which are then consumed by third-party applications. These applications use the APIs to retrieve customer data, initiate payments, or perform other banking operations, all in a safe, controlled environment. Transitioning now to BaaS. BaaS is a model where licensed banks integrate their digital banking services into the products of other businesses via API interfaces. Businesses outside banking can offer banking features such as payments or lending services without the need to transform into themselves. The architecture of BaaS involves a complex interplay between the bank's core system, the API interface, and the third-party system. It also requires compliance with strict security and regulatory standards to ensure safe and legal operations. To summarize, open banking is concerned with data sharing, API banking around data access using specific APIs and a secure architecture, and BaaS pertains to the provision of banking services via API interfaces. While these models differ, they are not exclusive, they collaborate. Open banking can function via APIs, and BaaS usually relies on API banking for integrating banking services. These technical variations and interrelationships make open banking, API banking, and BaaS unique in their respective ways. Collectively, they are revolutionizing the banking experience. One transaction, open banking, facilitated by APIs or application programming interfaces, has a broad spectrum of applications. But have you ever wondered about the extent of its impact? Its influence is transformative and extensive, comparable to a key that unlocks a treasure chest of opportunities. Uses APIs to share financial data securely. These APIs allow budgeting apps to access your financial data and provide a more transparent view of your spending. It assists you in making more informed decisions about your finances. Businesses also reap benefits, leveraging open banking to tap into financial for credit decisions. For instance, a business owner can authorize a lender to access their banking data, typically in a structured format like JSON or XML, to gain a better understanding of their financial health. This leads to more precise lending decisions. Open banking also delivers real-time insights into the financial ecosystem, enhancing fraud detection and compliance monitoring. For example, it can use machine learning algorithms on the vast data to identify suspicious patterns and prevent fraudulent transactions. It also helps in understanding macroeconomic trends. The data-rich environment fostered by open banking stimulates innovation. Fintech companies can design more personalized and efficient services, like payment apps that let you split the bill utilizing APIs for secure data transfer and transaction authorization. Open banking can promote financial inclusion. It simplifies access to financial services and extends banking facilities and credit to underserved communities. This can mitigate financial inequality and trigger economic growth. But remember, the concept of open banking extends beyond sharing. It revolutionizes the entire financial ecosystem, leading to heightened competition, improved customer service, and innovative financial products. By leveraging APIs and structured data formats, open banking is reshaping finance worldwide, empowering customers, enabling businesses, and equipping regulators with necessary tools. Open banking isn't merely about data sharing, it's about transforming the financial ecosystem through technological advancements. Behind the scenes, open banking relies on robust security measures. It doesn't merely share data, but does so securely. How does it achieve this? Primarily, the linchpin is OAuth 2.0, an industry-standard protocol for authorization. This framework employs tokens, which are granted upon successful user authentication and authorization, sidestepping the need to share personal credentials. Additionally, OAuth 2.0 offers specific authorization flows for varying applications, including web applications, browser-based applications, and mobile apps, all contributing to safe access of a user's financial data. Another critical measure is data encryption, which scrambles information to make it unreadable, accessible only to authorized parties. Open banking utilizes encryption algorithms like Advanced Encryption Standard (AES) and RSA. Specifically, AES is a symmetrical algorithm widely recognized for its speed and security, whereas RSA is an asymmetrical algorithm known for securely transmitting data over the internet. Lastly, open banking uses secure APIs, the gatekeepers allowing different software applications to communicate securely. These APIs are fortified with security features like SSL/TLS for secure data transmission, rate limiting to prevent DDoS attacks, and API keys for identifying and authorizing users. These APIs facilitate safe and controlled data sharing between the bank and authorized third-party providers. Open banking, while promoting data sharing, prioritizes and ensures the protection of this data. Rest assured, with the implementation of protocols like OAuth 2.0, encryption algorithms, and secure APIs, your data is in safe hands with Open. The implementation and subsequent effects of open banking notably fluctuate across the globe. Let's delve into a more technical perspective of this worldwide trend. In Europe, the UK's open banking is steered by the PSD2 directive, which mandates banks to release their data over secure APIs, thus encouraging the emergence of fintech startups such as Revolut and Monzo. They are navigating the complexities of API security and consumer education. Across the pond in the USA, the approach is heavily market-driven, with companies like Plaid capitalizing on open banking through the use of public APIs and data-sharing agreements, albeit in the absence of a definite regulatory guideline. Switching gears incorporates both regulatory push and market dynamics. Here, a lack of comprehensive regulation doesn't deter platforms like UPI from utilizing standardized APIs to reshape the digital payments ecosystem. In China, tech giants such as Ant Group are harnessing open banking, aided by their tech-savvy population and goals for financial inclusion, integrating APIs into their digital ecosystems for seamless financial transactions. Heading south to Australia, the Consumer Data Right Act has paved the way for open banking by implementing a two-tiered API system. However, data privacy concerns still linger. In Africa, Kenya is at the forefront of open banking, grappling with digital infrastructure and financial literacy issues while standardizing APIs for secure data sharing. It's evident that open banking is a global phenomenon with localized impacts, each shaped by a unique blend of regulatory frameworks, market dynamics, and cultural factors. Regardless of the challenges encountered, the potential of open banking is vast, heralding a future where finance is more inclusive, innovative, and centered around the customer. To revisit what we've understood about open banking, it's a cutting-edge concept that empowers customers to govern their financial data and permits authorized entities to gain access to their banking details securely through specific APIs like Open Bank Project, UK Open Banking API, and others. These APIs employ OAuth 2.0 or Connect for authentication, ensuring robust security. Remember, it's not to be conflated with API banking or banking as a service. API banking uses APIs like RESTful APIs, built specifically for banking functions that operate on HTTPS and JSON Web Tokens, JWT, for security. On the other hand, banking as a service relies on cloud-based solutions and uses APIs like Stripe or Google Cloud for banking operations. Open banking offers a plethora of applications, such as powering budgeting apps, enhancing business decisions, and regulatory oversight. Implement stringent security measures to protect user data during API interactions. Businesses worldwide are capitalizing on it to revolutionize finance, promoting innovation and financial inclusion. In essence, open banking is reshaping but reconstructing the future of finance as we comprehend it. With the deployment of specific APIs and secure data sharing protocols, open banking is spearheading a significant transformation in the finance world, and we are all a part of this monumental